If you've ever thought about buying Bitcoin but stopped because it felt too risky, too technical, or just plain confusing, this video is for you. Because here's the truth, you do not need to be a crypto expert, you do not need thousands of dollars, and you definitely do not need to understand every chart, wallet, or blockchain term before getting started. What you do need is a simple plan. In this video, I'm going to show you exactly how to start investing in Bitcoin step by step as a complete beginner. From understanding what Bitcoin actually is, to choosing an exchange, to buying your first amount safely, to avoiding the mistakes that cost beginners money. And make sure you stick around until the end because I'll also show you a simple beginner strategy you can use if you want to invest in Bitcoin without constantly watching the market. Let's get into it. 1. What Bitcoin actually is. Before you invest in Bitcoin, you need to understand what you're buying. Bitcoin is a digital currency that runs on a decentralized network called the blockchain. That basically means it isn't controlled by a single government, bank, or company. Instead, transactions are verified by a distributed network of computers around the world. One of the main reasons people are interested in Bitcoin is because it has a fixed supply. There will only ever be 21 million Bitcoin. That scarcity is a big part of why many investors compare Bitcoin to digital gold. Unlike traditional currencies, which governments can print more of, Bitcoin has a built-in limit. And that has made it attractive to people looking for an asset that is scarce, global, and independent of central banks. Now, this doesn't mean Bitcoin is guaranteed to go up forever. It is still highly volatile. There have been multiple times in Bitcoin's history when the price fell by 50% to 80% or more from its peak. So if you're getting into Bitcoin, you need to understand both sides. Yes, it has delivered massive long-term returns, but yes, it can also drop hard in the short term. That's why the way you invest matters. 2. Decide why you're investing. Step 1 is to get clear on why you want to invest in Bitcoin. Are you investing because you believe in Bitcoin long-term? You want portfolio diversification? You're trying to protect against inflation? Or are you just afraid of missing out? Because those are very different reasons. If you're buying Bitcoin just because it's trending on social media, that usually leads to emotional decisions. But if you're buying it as part of a long-term investment plan, you're much less likely to panic when the price moves. For most beginners, the smartest mindset is this. Treat Bitcoin as a high-risk, long-term investment, not a get-rich-quick scheme. A lot of financial professionals suggest that if you invest in crypto, it should only make up a small portion of your overall portfolio, often somewhere around 1% to 5%, depending on your risk tolerance. That way, if Bitcoin performs extremely well, you benefit. But if it crashes, it doesn't destroy your finances. So before you buy anything, decide this. How much are you comfortable investing? And how long are you willing to leave that money untouched? If you might need that money in the next few months for rent, bills, or emergencies, it should probably not be going into Bitcoin. 3. Only invest money you can afford to lose. This step is simple, but it's one of the most important. Do not invest money in Bitcoin that you cannot afford to lose, because Bitcoin is volatile, very volatile. For example, Bitcoin has had years where it gained several 100%, and other periods where it lost more than half its value in a matter of months. That kind of movement is normal in crypto, not unusual. So before you invest, make sure you have the basics in place. Emergency fund, no high-interest debt spiraling out of control, stable monthly budget, long-term mindset. A good beginner approach is to start small. That could mean $10, $25, $50, or $100. One of the biggest myths about Bitcoin is that you need to buy a whole coin. You don't. Bitcoin is divisible into tiny units. You can buy a fraction of a Bitcoin, which means practically anyone can start with a small amount. And honestly, that's the best way to begin. Start small. Learn the process. Build confidence. 4. Choose a reputable exchange. Once you've decided how much you want to invest, the next step is to choose where you'll buy Bitcoin. Most beginners start with a cryptocurrency exchange. This is basically a platform where you can create an account, deposit money, and buy Bitcoin. When choosing an exchange, look for a few key things. Strong security, easy-to-use interface, transparent fees. Good reputation, regulatory compliance in your country, two-factor authentication insurance, or asset protection policies where applicable. Popular large exchanges often include names like Coinbase, Kraken, Binance, Gemini, or region-specific regulated platforms, depending on where you live. Now, I'm not telling you which exchange to use, but I am telling you to do your homework. Read reviews, check their fee structure, see if they've had major security incidents, and make sure the platform is available and compliant in your country. This matters because fees can quietly eat into your investment. For example, some exchanges charge a spread plus a transaction fee, while others offer lower trading fees but maybe less beginner-friendly. If you're investing small amounts regularly, those differences can add up over time. Pick one that is secure and makes sense for your situation. 5. Set up your account safely. After choosing an exchange, the next step is setting up your account. This usually involves creating a login, verifying your identity, linking a bank account, debit card, or payment method. Most regulated exchanges require KYC, which stands for Know Your Customer. That means you may need to upload an ID and confirm your identity before you can buy or withdraw crypto. Once your account is set up, do not skip security. Turn on two-factor authentication, preferably using an authenticator app instead of just SMS if possible. Use a strong, unique password, and never share your login information with anyone. Crypto scams are everywhere. Fake customer support, fake giveaway links, phishing emails, fake apps. If someone messages you promising guaranteed returns or asking you to send Bitcoin first, it's almost certainly a scam. According to blockchain analysis firms, crypto scams and fraud have cost users billions of dollars over the years. So, security is not optional. It is part of investing. 6. Buy your first Bitcoin. Now for the part most people are waiting for, buying your first Bitcoin. Once your account is funded, search for BTC. That's Bitcoin's ticker symbol. Then choose how much you want to buy. As a beginner, there are usually two common ways to buy. Option 1, market order. This buys Bitcoin at the current market price. It's the easiest option and usually the best for complete beginners who are investing small amounts. Option 2, limit order. This lets you set the price you want to pay, and the order only executes if Bitcoin reaches that price. That gives you more control, but it's slightly more advanced. For most beginners, keeping it simple makes sense. If you're starting with a small amount and planning to hold long-term, the exact entry price usually matters less than your overall strategy. Just make sure you review the fees before confirming the purchase, and once you buy, congratulations. You officially own Bitcoin, even if it's just a tiny fraction. 7. Consider dollar cost averaging. Now let's talk about the beginner strategy I mentioned earlier. If you're nervous about Bitcoin's volatility, one of the simplest approaches is dollar cost averaging, or DCA. This means investing a fixed amount of money at regular intervals, regardless of the price. For example, $25 every week, $50 every 2 weeks, $100 every month. Instead of trying to guess the perfect time to buy, you spread your purchases over time. This can reduce the emotional pressure of investing all at once. And for beginners, that's huge. Because the truth is, most people are terrible at timing the market. They buy when prices are pumping and panic when prices fall. DCA helps remove that emotion. Historically, Bitcoin has gone through major boom and bust cycles, but long-term investors who consistently accumulated during downturns have often been in a much better position than people who only bought during hype periods. Now, DCA does not guarantee profit, but it can be a very practical way for beginners to build exposure gradually. 8. Decide where to store it. Once you buy Bitcoin, you need to decide where to store it. You have two main options: leave it on the exchange or move it to a personal wallet. Leaving it on the exchange is easier and more convenient, especially for beginners, but it also means you're trusting that platform to hold your Bitcoin securely. The crypto industry has seen exchange failures in the past, so this isn't a trivial decision. A personal wallet gives you more control. There are two common types: hot wallets, connected to the internet, easier to use cold wallets. Hardware wallets stored offline, generally more secure for long-term holdings. There's a common phrase in crypto: not your keys, not your coins. That means if you don't control the private keys, you don't fully control the asset. For small beginner amounts, leaving your Bitcoin on a reputable exchange may feel simpler. But as your investment grows, learning how wallets work becomes increasingly important. If you ever move Bitcoin to a wallet, triple-check the address. Crypto transactions are generally irreversible. One mistake can mean permanent loss. 9. Avoid these beginner mistakes. Here are some of the biggest mistakes beginners make when investing in Bitcoin. First, investing too much too fast. Just because Bitcoin has had strong past returns doesn't mean you should throw in money recklessly. Second, buying based on hype. If you only buy when everyone is excited, you'll often enter at emotional highs. Third, panic selling. Bitcoin can drop sharply. That doesn't automatically mean your thesis is broken. Fourth, ignoring fees and taxes. In many countries, selling Bitcoin or trading it can trigger capital gains taxes. Always understand the tax rules where you live. Fifth, poor security. Weak passwords, no two-factor authentication, and clicking random links is a recipe for disaster. And finally, expecting overnight wealth. Bitcoin is an asset, not magic. Yes, some people made life-changing money from Bitcoin, but many others lost money by chasing pumps, using leverage, or making emotional decisions. The goal is not to gamble. The goal is to invest intelligently. 10. Simple beginner action plan. So if you want the simplest possible version of this, here's your beginner action plan. Step 1. Learn the basics of Bitcoin. Step 2. Decide why you're investing. Step 3. Only invest money you can afford to lose. Step 4. Choose a reputable exchange. Step 5. Set up strong security. Step 6. Buy a small amount of Bitcoin. Step 7. Consider using dollar cost averaging. Step 8. Learn about wallets as your holdings grow. Step 9. Think long-term and ignore the noise. That's it. You do not need to overcomplicate this. Starting small with a clear plan is infinitely better than waiting forever because everything feels confusing. Bitcoin is one of the most fascinating and controversial investments of our time. It has created enormous wealth. It has also wiped out careless investors. And that's exactly why education matters. If you approach Bitcoin with discipline, patience, and realistic expectations, it can be a legitimate part of a long-term investment strategy. But if you approach it emotionally, impulsively, or without understanding the risks, it can become an expensive lesson. So take your time, start small, stay secure, and invest with a plan. If you found this video helpful, make sure to hit the like button and subscribe for more simple, no-hype investing guides. And in the comments, let me know, have you started investing in Bitcoin yet? Or are you still researching? Also, if you want, I can make a follow-up video on how to store Bitcoin safely for beginners or Bitcoin versus Ethereum. Which one should you buy first? Thanks for watching, and I'll see you in the next one.